What's going on, everyone? My name is Jeff. So on Friday, we saw a big move down again on the markets. This really comes as no surprise. The big move was due to Trump's threat of tariffs against Mexico. And this sent lawmakers and business people scrambling. And of course, it sent the Dow Jones down about 350 points. And this news broke on Friday. Of course, it is the weekend. It is June 1st today, but I'm just doing a little recap on this news that come out Friday. So Trump said that he was invoking emergency powers to impose tariffs of up to 25% on all Mexican goods, and he showed no signs of backing off. He said he would proceed with initial 5% tariff on June 10th, which could hurt American consumers, and some of its biggest companies include automakers, agricultural companies, and retailers. And so, of course, it did send the Dow Jones down about 350 points. I thought we were going to see the worst of it early off in the day, but actually by the end of the trading day, the Dow Jones was down about 354 total points and then even took a further hit in after hours. So obviously, pretty much all stocks got hit again really hard on Friday. Guys, this is what I've been saying for the past couple of weeks. I'm looking for somewhere between 10 and 15% to come off all three major indexes before we see a reversal, and perhaps we will trade down further than that. It is all about sentiment, and there was some news on Tesla stock that I do want to talk about, and I also want to talk about where I think Tesla will find some level of resistance and perhaps a level of support. Do me a favor, guys, make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. So Tesla was dealt yet another blow when Barclays come out and called it a niche car maker. Now, this does feel like some of these investing firms are piling up on Tesla. Of course, we had the $10 price target and the $36 price target, those from Morgan Stanley and Citigroup, and now Barclays kind of jumps on top of the pile, calls Tesla a niche car maker, and lowers their price target down even more. This happened on the 30th, which was Thursday. So, Barclays analyst Brian Johnson, which I'm not very familiar with him. As a matter of fact, I have not followed very many of his upgrades and downgrades. Now, I do watch Barclays pretty good. I have to say they're pretty good with banks and tech companies. Outside of that, I don't really think I value their opinion too much. However, Tesla does not fall in either a tech company or a bank. This is an auto manufacturer, and it's struggling very much right now. But anyways, Brian Johnson came out and he dropped his price target on Tesla to $150 from $192. And of course, he cited the demand for the Model 3 has stagnated in the US. Of course, they say Tesla lacks a path to significant profitability from its auto business and its solar storage installations. And of course, we all know the stock has declined sequentially over the past 2 quarters. So this really isn't any information that we don't already know. He went on to add that Elon Musk's attempt to pivot to a full robotaxi scenario also failed to spring excitement around Tesla's self-driving capabilities. Now, I'm a little torn on that. I think there is quite a bit of excitement around Tesla's robotaxi scenario. I will just say you're not seeing it in the stock price. Then again, look around. All stocks are losing value right now. And unfortunately, I think the effects of this trade war, and of course the bond market being inverted, everything is bearish right now, and stocks are not trading around their normal valuation. Now, he did mention that they expect more investors to gravitate back to Tesla's near-term fundamentals of demand, profitability, and cash generation. And that is why they maintained their underweight rating on the stock. Now, this new price target that Barclays comes out with is one of the lowest on Wall Street, with only analysts at Cohen, Williams Research, Vertical Group, and Churchill Research holding lower price targets on Tesla. So the average of the 4 lowest targets implies a 54% downside from where Tesla closed on Wednesday. So if you want to go off the past month, guys, Tesla's stock has been in absolute free fall mode. Did have that short period after earnings where it traded down around $230, and then it temporarily ticked back up to around $250 and has pretty much not even got close to holding that level. I did think we were going to see some level of support around $200, but it just pushed right through it, and now Tesla is trading at $185. And especially if you want to go over the last 5 trading days, guys, this pattern seems to be very, very consistent. It does have periods of time during the trading day where it does seem like it's ticking back up, and then it seems to just lose all of its momentum, trade back down, kind of get a little bit of a sideways movement to it. But as you can see, over the course of 5 days, it's just continuing to make more and more lows. Okay, so I don't think Tesla is anywhere near to a point where you would want to buy it yet. It did make its 52-week low on Friday, and it got down under $185, down to $184.90. And so unfortunately, due to the market conditions, and of course, it really seems like analysts are piling on Tesla right now, I would not try to jump in and take a long-term position yet. Now, if you wanted to buy call options for maybe a year or a year and a half out, I could see that. But I also warn you, I do think the stock is going to go down lower. I'm standing by, you know, what I mentioned in my videos from the past couple of weeks. Let's see Tesla trade down to $180, then we'll take another look at it. I do think it could find some support at 180, but I also thought it could find support around 200, and it just pushed right through those levels. Now, I have personally already covered on any put options that I was playing on Tesla. I have not bought into any other ones temporarily, and the reason is I do think that the options market is pricing in another big drop in Tesla stock, because the put options are not cheap, and even when Tesla trades up in the temporary, does not seem like them options are losing any value. They're holding their value really well. So I've actually switched my focus into NIO. Okay, now NIO reported their earnings last week. Guys, again, they did beat on EPS and revenue, but it was still viewed as very negative, and nobody was really impressed simply because revenue estimates were cut in half, and then forward guidance was not impressive enough for people to really buy into the stock. And we have seen well over $1 shed on NIO stock in 1 week. Guys, I think this one is going down lower. So what I've got here, I have the August 16th put options pulled up for NIO. I did want to give myself a couple of months because I don't think any of us know exactly how long this trade war is going to go on for. But the advantage we have by playing 3 months out is we do have a nice little cushion of time. What I'm really trying to focus on is that break-even point and that strike price. I do think NIO is going to be going under $3 a share this week. I think that is pretty obvious. And right here, as you can see, right after earnings, when NIO traded over $4 a share, I bought 6 of these put options on NIO. Right now, I'm currently sitting at a little over a 400% gain on these options, and I do feel like these will get in the money. Of course, the way I did not buy them all at once, my break-even price is $2.80, so we could be in the money as early as Monday or Tuesday on those, and these options might be well over $1, maybe $1.20. So doing really well on those. I would even look here at these $2 strikes with a $1.89 break-even point. Now, they're very cheap right now. They're only about $11 right now per contract, and I feel like at the pace that NIO stock is trading down, I don't know as though these will get in the money, but it is certainly looking that way. And I think you could easily look at somewhere between a 500 to 1,000% return on these options if you buy here around $11. So I'm probably going to be buying into some of these on Monday, even on any real jolt up, or if the markets do bounce back up temporarily. I think it is just going to be a temporary bounce, and that most all stocks are going to continue to trade back down. So, but anyways, guys, that's all I got for the video. Make sure to go down in the comments section and share your thoughts on both Tesla and NIO stock. Like I said, I want Tesla to trade down to 180, maybe 175 to 180. Then we will take another look at this stock and see if it is time to buy or if there's going to be more pain ahead. Again, like I said, I am out of all put options or short sales on Tesla right now, and I'm not really going to be looking to enter back in until I have a clear picture or clear idea on what I think the near-term future is on Tesla. So thanks as always for watching the video. Have an awesome day.